Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the MJ sector here. We're going to look at WEED, APH, ACB, EMC, FIRE, MJN, and HMMJ. EMC does have earnings this coming week, I believe this Monday, so certainly going to be paying attention to that and the reaction. I don't think it'll have a rippling effect on the sector as a whole, but perhaps it will have an effect on some of the smaller names. And again, I'm still distinguishing really the big three, which are WEED, APH, and ACB, and some of the other smaller names, and those still listed on the, not listed on the Toronto Exchange, really is a separating factor between the three, in my opinion, in terms of the amount of volume we see and things like that. So WEED, we had an attempt at a change in the trend, and we have a clear lower high and lower low pattern over the past month, all of August, and we hit our low, and the bulls tried to change this trend, but we have been unable to do so yet. We have a top at 904, and while we did break one lower high, it was only by a penny, and then we started pulling back. So 904 and 905 is a clear resistance level that the bulls need to break in order to break this lower high pattern and shift momentum back in their favor. And we can see that the Bollinger Bands are now leveling off. They're very tight. We are close to a bull MACD cross. If we can get over this low $9 resistance and look at the next resistance of 921, then we will start to see this bullish MACD cross get going. Overall, this is healthy consolidation. If you see where we have come from on these breakouts, we've consolidated. Some of them have been shorter term in terms of the amount of time they took to play out, but they led to higher highs. And I look at this daily chart, and I see no red flags here for the bulls. If we were to pull back and break the low of 837 and 836, that would be a red flag at that point. But as of right now, that's our base of support of this consolidation, and now the bulls are going to start working on higher lows and higher highs. A more near-term support is 866, the low of Thursday, and we have an inside bar, very tight range from Friday to be watching. A break of 888, we'll be looking up at those $9 resistance levels, and a break of 877, and we'll be looking at 866. So all in all, healthy longer term, and again, I have a more longer term perspective on this sector. If we were to see big time bull moves like we've seen here, 2-3 days of a very strong breakout, I would look to sell and then reload on consolidation. But otherwise, I am looking on the weekly chart as my guide, and I am looking longer term for positions to hold into 2018. And I do have some positions, have a little bit of APH stored away for long term, and some EMC as well, making a little bit of a gamble on these earnings. Not a significant amount of capital. So on WEED, the healthy consolidation, you can see 3 weeks, now a bullish reversal candlestick. We did have a bullish doji last week with no follow through, but this is a more significant bullish reversal candlestick. We do have a bull MACD cross trying to follow through, and we're back testing this middle Bollinger Band of 850, and we've held it 4 weeks in a row, back testing this level. It's still descending, and we're just looking for these higher lows and higher highs to continue. We have our low of the pullback from the summer, then our higher low, higher high, and now we're looking for that higher low, and we would have to break 953 to get that higher high and follow through. APH has a more significant break of its daily trend than WEED does at this point. So resistance in the lower highs were down at 611 and then down at 605. And we made a break over both of those levels clearly up to 615. And that is a significant break of the lower high pattern. So now we're looking for higher lows and higher highs to develop. We already have a few higher lows set at 562, 565, and now 571. So the bulls are looking for a higher low compared to 571, and then a move back up towards 615 to see a daily bullish MACD cross. You can see that daily cross is a lot closer on APH, and if we can get over 615, we are looking at the next resistance of 620 and 644. So we are holding these moving average supports and just trying to continue slow and steady, higher lows and higher highs. The weekly chart is, I guess it is a little bit too drawn out to be a bear flag at this point, and I wouldn't even call it a bear flag just because it's only 1 week of downside and the weak bounce attempt at this point. Really, the daily chart would be my guide on this pattern, seeing that clear higher low pattern. And you couldn't really draw a ascending parallel channel, which is what a bear flag would be. This is a tightening range, more of an equilibrium pattern or a pennant of lower highs and higher lows. So it's not the exact definition of what a bear flag would be. So I'm not worried about a bear flag on the weekly time frame at this point. The bulls are just trying to establish their higher low and see the bulls show back up to head to higher highs, and that would have to require a break of 680, so we are a ways away from that level. But here as well, the weekly time frame waiting for this bullish MACD cross. We have a higher low and a higher high set on the weekly. We're now trying to set our new higher low down at 565 and trying to head back up over $6 and turn that psychological $6 support back into a sturdy support. ACB is much weaker than these other two. You can see we're nowhere near breaking this lower high pattern on the daily time frame just yet. We have a bunch of moving average resistance. So our lower highs are 256, 253, and just now this past week 247. And we did lose the higher low pattern here. We broke this support of 241. So our support right now is 238 and 235. So I personally don't like ACB, and we did have a nice breakout here early July, but I haven't liked ACB compared to these other two names really for the past 4+ months. If you've been watching these videos, you know that I haven't been a big fan because of the setback that the dilution put on ACB. It's now really one step behind those other names. So there's still trading opportunity. There's still, some bullish action, but it's just comparatively, I would be much more comfortable in these other names. So we are trying to form a higher low on the weekly time frame. 272 is that level, right? Actually, that's the wrong number. 235 is that level right now. And we would have to break up at 282 to see a higher low and a higher high. And for the bulls to gain momentum, we still don't have momentum on this weekly time frame. We have our high here, our low, the pullback, and right now a lower high. We're not really forming higher lows and higher highs yet like we are on the weekly chart for those other names. So EMC with earnings, we're either going to see a bull break of 190 on a bullish reaction, or on a bearish reaction, we're going to test down here at 162. Those are the two levels to be watching, 162 and 190. If we get over 190, $2 psychological will be the next level. And if we break 162, we're looking at the all-time low of 150. So really no information in terms of what traders or investors are expecting in terms of action at the end of this week. We're in a tightening range with a lower high pattern and still higher lows. Support is 171 right now, a little double low, and resistance is 190 and 188. And it's very, very thinly traded. So a little bit of capital goes a really long way. And we can see 10-cent jumps on EMC very, very easily. So have to keep that in mind. It is much higher risk and higher reward. That's why I allocate a much less significant size of capital to this play, just because there is that much more higher risk and higher reward. And obviously earnings is a big gamble as well. So not putting a lot of money, much more comfortable in the other big three names, although not ACB, the other big two for me in terms of having that capital. So EMC on the weekly time frame is trying to change this trend, but we haven't done it yet. We're also on the verge of a bullish MACD cross here. We're coming off our low. We have another lower high at 211. Now we're trying to form higher lows and higher highs. So our new higher low is 162, and we have to break 211 to see the higher low and higher high, and for the weekly trend to shift to start favoring the bulls. Using these exponential moving averages, we look at our TCG crosses, the 4 and the 8 period. We had the bear cross up here at $3.50, and that was a clear bear break. And we were all over exiting anything bullish to do with EMC at 350. And that's when our bear break occurred. And we haven't seen a bull cross yet. We came very close, and now we're right on the verge. And if we do head back over $2 on a bullish reaction to earnings, we will see a TCG cross and a bull MACD cross, both on this weekly time frame for EMC. FIRE is also pretty tight. Equilibrium pattern. We have our high of the reaction to news that everybody was waiting for. Sell the reaction to news like we were anticipating for months, because everybody's sitting there waiting for the news. Everybody who's going to buy in anticipation of that news is already in and looking to lock in profit. So we dumped very significantly. So our high, low, lower high, higher low, and now straight across. So support is 108 that must hold. Near-term resistance is 117, 121, and a key level of 132. Weekly time frame for FIRE, still a lack of history here, but we're starting to get enough history that it's worth paying attention to, where we have our higher low. Bullish reversal doji 2 weeks ago was not confirmed this week. That's not a good sign for the bulls in the short term. Have to see higher lows and higher highs to change this downtrend on the weekly time frame for FIRE. MJN has a really nice bull break. It was one of the strongest names over the past 2 weeks in the sector. We had very healthy consolidation and then continuation, and that consolidation hit our low. We broke the lower high pattern once 223 broke, and then the bulls made it all the way up to 247. So a nice, almost a 10% move from that break of the lower high pattern. And now we're trying to form a new higher low to keep the higher low and higher highs intact. So our new resistance is 247, the high of this move. Current support is 226, but the candlestick doesn't give us confidence that our low of consolidation is in just yet. So it's at 226, and then I'd be looking down at 224. On the weekly time frame, we can see that strong bull break over the middle Bollinger Band resistance, which rejected the price for 5 weeks in a row. Bull MACD cross here as well, right on the verge. You can see all these weekly time frames are in similar positions in terms of that bullish MACD cross, which they obviously want to see follow through, because we have not seen these names follow through with their weekly bullish MACD cross in a very, very long time. And that was really the start of the breakout last year. Certainly not anticipating that same kind of breakout to happen, but we've seen a little bit more choppy action in APH with a couple crosses. But looking at WEED, same thing. So the names that have not seen this choppy back and forth action with the MACD could perhaps have a little bit more emphasis placed on it, in terms of whenever I see like a moving average support, if the price is going back and forth and closing above it and closing below it, I pay less attention to it. But where it's very clear and steady, where, you know, if the support holds consistently, then I'm definitely paying attention to it. So same thing with this MACD, where if it's going back and forth in choppy action, then I know it's not really as important. But you look at a name like MJN, and we have not seen a bull cross. You know, crosses are pretty rare is the point. So keeping an eye on that. So in terms of the weekly time frame, again, that resistance is 247. It was the highest price we've seen throughout most of the later summer. And then we're looking at 248 and 247 as a little double top. And then we'd be looking up at 264 as the next resistance after that. HMMJ as the sector, certainly some U.S. exposure here, but not a strong chart right now. And we're barely clinging on to some higher lows. 836 is support, followed by 821. And we just bounced off of 837. So 836 is a must hold. I would absolutely want to be out as a bull if that level were to break. And resistance trying to break the lower high pattern, 864 and 872, two levels to break on this lower high pattern. So keeping a close eye on this for a gauge of the sector overall. There's our bullish doji. Need a green week this coming week to confirm that. And otherwise, the bulls are in trouble here if we break that 836 level, because we're right back down on top of our all-time lows. So that's what we've got in the space heading into this coming week. We'll be certainly watching EMC and watching to see if these weekly bullish MACD crosses can get a little bit more momentum in their favor. I appreciate you watching. We'll continue to check back in every weekend. Have a great rest of yours.